While payment flows capture headlines, a quieter revolution is unfolding. Real-world asset RWA tokenization on the XRP ledger. It's the systematic transformation of traditional assets into digital tokens, and it's acting as a quiet rocket engine for XRP's value. Why the XRP ledger? The answer lies in its inherent advantages for institutional-grade tokenization. First, settlement finality in 3 seconds. On the XRPL, a transaction is final in 3 to 5 seconds. There's no waiting and no risk of reversal. This speed and certainty are invaluable. Second, fees below a penny. The XRPL offers predictable, extremely low transaction costs, making it economically viable to tokenize and transfer assets at high volumes. For institutions, these fractional costs add up to massive savings. Every time a new asset is tokenized on the XRP ledger, the issuer typically needs to lock a certain amount of XRP as the on-chain reserve. This pulls more XRP out of active circulation and into these utility vaults. It's not being traded, it's being held for a functional purpose. The economic principle is fundamental. As the supply of actively traded XRP decreases, the price naturally follows suit. It's a simple supply-demand dynamic with a powerful structural underpinning. Analysts project that by year-end, another $2 billion in real-world assets will be minted on the XRPL. To facilitate this, an estimated 700 million XRP will need to be absorbed and locked up. That represents approximately 1.3% of the total circulating supply, gone from the open market. This quiet rocket engine is just beginning to fire. For those who analyze charts, the recent price action of XRP is intriguing. When you zoom out to the weekly chart, filtering out short-term noise reveals what many technicians are calling a potential bullish reversal. There are credible signs of an inverse head and shoulders pattern forming. The head sits between 2 shallower dips, and multiple reports suggest the neckline resistance lies somewhere in the $2.30 to $2.50 range. A decisive weekly close above those levels, with strong volume, would lend weight to the pattern. Measured move targets based on that setup in public analyses tend to fall in the lower $3 to $4 zone initially. Some technical commentators, including Tony Edward, have broader projections in the $5 to $8 range given favorable conditions, regulatory clarity, macro tailwinds, and institutional interest. A key resistance zone to watch is around 3.30 to 3.40, and the level at 3.60 is mentioned in some speculative forecasts, though it isn't broadly confirmed yet. If XRP can hold above these resistance levels and flip one into support, it raises the probability of further upside. Beyond XRP-specific catalysts, a powerful macroeconomic tailwind is gathering strength. It's about the broader financial environment, and it's shifting in our favor. The Federal Reserve has shifted its policy stance. In September 2025, it delivered a 25 basis point cut, lowering the federal funds rate to between 4 and 4.2%. Futures markets are now anticipating at least one more rate cut by year-end. Historically, when real yields decline, hard-capped and non-inflationary assets tend to outperform. With rates falling, bonds become less attractive, pushing some capital toward assets seen as scarcity hedges. While XRP is often discussed in this context, there is no public confirmation of any commodity reclassification or regulatory designation that officially categorizes XRP in the same class as hard commodities. But the narrative is shifting. Falling rates, growing institutional interest, and discussions around scarcity increase the appeal. This combination could create real tailwinds for XRP's value, grounded in economics, not just hype. Adding to this dynamic is the weakening US dollar. The dollar index has fallen for 6 straight weeks. A weakening dollar is rocket fuel for anything that cannot be printed. When the dollar's purchasing power diminishes, investors seek refuge in assets that hold their value. Commodities, precious metals, and now digital commodities like XRP become highly attractive. Crucially, XRP's reclassification as a commodity plays a pivotal role. Before, institutions might have viewed XRP as a speculative tech stock proxy. Now, they have a green light to treat it as a legitimate macro treasury asset. This opens XRP to entirely new pools of capital from institutional treasuries and sovereign wealth funds. The confluence of falling real yields and a weakening dollar creates an incredibly fertile environment for its price appreciation. While the bullish case for XRP is compelling, it would be careless to ignore the risks. $7 may be possible, but it isn't guaranteed. If XRP fails to break and hold above the key 3.60 resistance, it could trigger a pullback toward the 2.90 to 3.10 range, stretching out the consolidation phase and delaying any major breakout. There's also the issue of supply. Ripple Labs still controls about 36 billion XRP in escrow, releasing 1 billion coins each month. While most are returned, a portion is sold to fund operations. That's normal, but it does add steady sell-side pressure. And if demand from ODL transactions or institutional inflows were to slow, those monthly unlocks could temporarily overwhelm the market. Another risk comes from central bank digital currencies. A fully functional digital dollar could remove the need for a separate bridge asset like XRP for some payment corridors. Interoperability between CBDCs is far from solved, and XRP could still play a role as the connector, but it's a development that could change the landscape. And of course, XRP still moves with the wider crypto market. A sharp Bitcoin sell-off triggered by a macro shock would almost certainly pull XRP down with it. That's why risk management matters. Never invest more than you can afford to lose. I personally hold XRP, but I keep cash ready to buy dips if these risks play out. If you find this information valuable, then please do me a quick favor. Tap that subscribe button and drop a thumbs up on this video. To go from around $3 to that $7 target, it's not magic. It's a series of critical steps, each building on the last, and each one needs to hit. It starts with $3.60. That level has been identified by many technical analysts as a key resistance. If XRP breaks above $3.60 and then retests it successfully, that would be a strong signal. Institutional buyers pushing past the hurdle, volume holding up, and sentiment shifting. Next up, analysts have set $5.85 as a major target. Forecasts from sources like Dark Defender suggest that once resistance zones are cleared and momentum builds, that level is in view. It won't happen overnight, but this level is seen by many as achievable with continued technical strength and macro tailwinds. Of course, pushing into the $6 to $7 range depends on a few wildcard factors. Stronger confirmation from volume, sustained institutional inflows, regulatory clarity, but the groundwork is there. If those align, $7 starts looking less like a moonshot and more like the next logical boundary. No one can say exactly when any of this happens. But given the recent flow of interest, the tightening of resistance levels, and increasing optimism from both charts and institutions, reaching toward 6 to 7 by the year's end becomes increasingly possible. Not certain, but far less far-fetched than many realize. Navigating the crypto markets requires vigilance. Here are 4 key indicators you should be watching like a hawk. First, track the weekly ETF flow. This is your window into institutional demand. Consistent, strong inflows are bullish. If weekly inflows drop under $50 million for 2 straight weeks, that's a signal to reassess. Second, monitor Ripple's quarterly ODL report due late October. This is a critical update on real-world utility. We want to see quarter-over-quarter growth above 15%. Strong ODL numbers reinforce the fundamental utility narrative. Third, keep a close eye on the dollar index and the 10-year real yield. A strengthening dollar or a spike in real yields would act as a headwind for crypto. Any significant reversal in these macro trends could lead to a short-term pullback. And finally, watch the Ripple escrow wallet addresses on ledger.exposed. This provides transparency into Ripple's sales. If sell-side pressure from these addresses suddenly jumps above 300 million coins per month for an extended period, it could tilt the supply-demand balance and put downward pressure on the price. Friends, $7 XRP stopped being a fantasy the moment a federal judge closed the SEC case. That act of regulatory clarity transformed XRP into a compliant, recognized commodity and opened the floodgates for institutional capital. Institutions have responded with conviction, plugging a multi-trillion-dollar payment rail straight into XRP's liquidity. The quiet revolution of real-world asset tokenization is systematically locking away supply, creating a structural scarcity that few appreciate. The charts are lining up, and the macro environment is tilting decisively in favor of scarce assets. Could it fall short? Of course. But when you look at every major pillar, the law, the adoption, the tokenomics, the chart structure, and the macro environment, they are all pointing in the same direction. The stars are aligning in a way we haven't seen for XRP, perhaps ever. If you're already holding, keep